Walter retired last year. His income dropped, his life slowed down, and then his Medicare premium did the opposite. It nearly doubled. He hadn't changed his coverage at all. What hit him was a surcharge most people never see coming, with a name that sounds like a person: IRMAA. And here's the part that stings. It was triggered by money he earned 2 years ago. Today, in plain English, I'll show you what IRMAA is, why it can jump so suddenly, and the 2 moves that can lower it or wipe it out. So let's start simple. IRMAA stands for the Income-Related Monthly Adjustment Amount. In normal words, if your income is above a certain line, Medicare charges you a surcharge on top of your Part B and your Part D premiums. It is not extra coverage. You get the exact same Medicare as your neighbor. You just pay more for it. In 2026, that line sits at $109,000 a year for a single person and $218,000 for a couple. Under that, you pay the standard premium and IRMAA never touches you. Over it, the surcharge kicks in. Now here's the fact that catches almost everyone: the timing. Your 2026 surcharge isn't based on what you earn now. It's based on your tax return from 2024, the most recent one Social Security gets from the IRS. So your premium today is reacting to your income from 2 years ago. That's exactly what happened to Walter. He was still working in 2024, so his retired, lower-income self in 2026 got billed for it anyway. And it doesn't ease in gently. It's a cliff. Go $1 over a bracket, and you owe the full surcharge for that whole tier all year. Not a few cents on the dollar above the line, the entire step. $1 can cost you hundreds. Let me put real numbers on it. In 2026, the standard Part B premium is about $203 a month. At the lowest IRMAA tier, a surcharge of about $81 gets added. At the top, the Part B surcharge reaches $487, pushing the monthly bill to nearly $700. And there's a second surcharge stacked on your Part D drug premium too, up to about $90 more a month. For a married couple, remember, each spouse pays their own IRMAA, so it can land twice in one household. So who gets caught by this? Usually it's not the steadily wealthy. They expect it. It's the one-time spike 2 years back. A Roth conversion, selling a home, a big required withdrawal from a retirement account, a large capital gain. Any of those can shove your income over a cliff for a single year, and IRMAA shows up 2 years later like a bill you forgot you signed. So has anyone here ever opened a Medicare bill that was suddenly hundreds higher and had no idea why? That's almost always IRMAA. Tell me in the comments. I read every reply. Now, the good news, because there are 2 real moves here. The first is the one almost nobody knows about. You can appeal it. If a life-changing event lowered your income, you retired, you stopped working, you lost a pension, a spouse passed away, you divorced, you file a form with Social Security called Form SSA-44. It tells them, in effect, don't use my 2-year-old income, use what I actually make now. For someone like Walter who just retired, that one form can erase the surcharge entirely. The second move is for the years ahead. Manage the income that feeds the cliff. Because IRMAA is a cliff, staying even a little under a bracket can save you the whole tier. So people work with the edges, spreading out Roth conversions instead of doing one giant one, using something called a qualified charitable distribution to satisfy a required withdrawal without raising the income that counts. Timing the sale of an asset. You don't need to be an expert. You just need to know the cliff is there before you make a big financial move 2 years before it bites. So here's the one thing to do. If your income recently dropped because of a life change, don't just pay a high IRMAA quietly. File Form SSA-44 with Social Security and ask them to use your current income. And before any big one-time income event, ask one question. Could this push me over a Medicare bracket 2 years from now? That single question has saved people thousands. And if you'd like a real person to walk through your situation for free, no sales pitch, no commission, call your State Health Insurance Assistance Program, your SHIP counselors, at 1-800-MEDICARE. For an appeal, Social Security is who you file with. So tell me in the comments, did your Medicare premium ever jump and leave you guessing? If this made IRMAA finally make sense, subscribe. Next, we're opening up a benefit going the other direction. Extra Help, the program that pays most of your drug costs, and why millions who qualify never claim it. This is general information, not financial or tax advice, and we're not affiliated with Medicare. Always check your own situation. I'm really glad you're here. I'll see you in the next one.